Welcome to Ty's Daily Market Briefing for Thursday, July 9th. What has President Trump posted on Truth Social today? Actually, not very much, but then he just got back from Turkey at 2 a.m., so you got to give him a little bit of a break. But what's important is, and I think part of the reason the markets are reacting the way they are today is, while he was on Air Force One, he said the U.S. was ready to de-escalate, telling reporters that Iranian officials had called a little while ago and want to make a deal. Whether that's true or not is up for discussion, but I think it allows the Iranians, if they behave, that there will be no more strikes after the heavy strikes that we've done over the last 2 days. Axios, and I like Axios because I think their contacts in the administration and on Capitol Hill are very, very good. They report that a U.S. official said that the current escalation could last a day or two, a week, or a month, depending on whether Iran continues its attacks on commercial ships in the Strait of Hormuz. Now, of course, what ships are willing to try to transit even under U.S. protection close to the Omani shoreline. We'll have to see. Basically, a U.S. official told Axios, we're going to slap them around a bit so they understand we're not effing around. The U.S. official claimed that the current escalation stems from frustration among the more radical elements inside Iran's fractured leadership who believe that the memorandum of understanding has not delivered real benefits for Tehran. And I said, Trump signaled that the U.S. is ready to de-escalate. So if you don't mess around, we won't hit you again. So for Iran, maintaining control over the strait is a key objective in any deal. But Iranian officials didn't like the fact that the U.S. was routing ships through the southern lane without Tehran's approval, and somebody decided to shoot off some rockets. No idea what the leadership looks like inside, if there is any strong central leadership at this stage. Now, U.S. officials have said that they feel like they had room to escalate because hundreds of oil tankers have managed to leave the Gulf in recent weeks, and it's eased concerns inside the administration that a renewed clash would immediately trigger an oil price spike. It has, but as you can see today, it's actually down about 2.5%. So this could be a little bit of a rough negotiating ploy. I think the market thinks that way, which is why we've seen a relatively modest reaction from the market. Wall Street Journal reports that the global oil market isn't ready for the Iran ceasefire to end. Basically, they're saying that there's a lot of imbalances still in the market. Stockpiles will take much longer to restore because they're down low. Commercial inventories rose 3 million barrels in the U.S., but it's the first time after 10 consecutive weeks of drawdowns. Stockpiles apparently are so low in Cushing, Oklahoma, which is where WTI settles, that it's reached operational limits and it's hard to withdraw more crude. So, and also the Strategic Petroleum Reserve, where we keep a lot of oil, is going lower, and it's at the lowest level since 1983. On the positive side, the Energy Department has awarded only about 500,000 barrels of the 40 million it had authorized for the most recent release. And hopefully, as the market goes lower, that the U.S. has been trying to replenish this, but it's probably a little bit harder than it sounds. But the supply crunch hasn't eased in the market for petroleum products like diesel and gasoline. The reason is the U.S. is exporting a lot of these fuels near record levels. Stockpiles of gasoline at the Gulf Coast are 7 million barrels lower than normal for this time of year, and it had started kind of below normal at the beginning of the year, which is why gasoline and diesel is still so high. We've been exporting a lot, because other countries need them. Refinery runs are down in China. Russia's not refining a lot right now because Ukraine is hitting them pretty hard. So Brent retracing 2.5% today from about a 10% move over the last couple of days. Let's see if that continues. I suspect it may go flat. Let's see how it closes. It may go flat tomorrow. Maybe you don't want to short this over the weekend in case there's more military strikes from either side. First uptick yesterday and up for the second straight day, a nice 5-cent jump. I suspect this could easily get into $3.90, close to $4 before it steadies. So, of course, we look at Korea every day because it's been helping drive the markets, before we start the airstrikes and the attacks on shipping. down just modestly, less than 1%. The SK Hynix is going to start trading tomorrow on a limited basis, and then fully on Monday. Now, if there's heavy buying of SK, I think this could help sentiment, may even help sentiment in Korea, and sentiment here has been very poor for the past 3 weeks after we reached a high right here. Where are we today? Nice bounce, almost up 1% here in the middle of the afternoon. Looks like consolidation. I'm getting less and less worried about this as being a top because of how we've performed here. Tech, helped, I think, by Micron today. Basic materials up strongly. Energy is the one that's dragging a little bit. So, stocks, S&P 500 up 0.8%. The small caps are doing very well, up 1.4 and 2.2% here. Bonds are up a little bit, so the dollar's down, and a nice recovery for metals, which are down yesterday, as well as crypto. So apparently the SK Hynix IPO that's going to price tomorrow, it's going to price at $149 per American depository receipt, and that's 1/10 of a share of SK. About 3.1% above the closing price. They're about 7 times oversubscribed. Sorry about this little problem here. And it'll be right now it'll be the largest ever first-time share sale in the U.S. by a foreign company. So 7 times oversubscribed. A lot of institutional investors, as I mentioned about a week ago. I think they really want their their fingers in the pie on this. SK right now where the pricing is, it's probably at 6 times forward earnings, which is compared to U.S. names and chip makers is just cheap. $149, I would be surprised if it didn't print $200 very quickly, maybe immediately. I can't get any. My first chance to buy it will probably be on Monday. Barron's reporting that Micron is unveiling a $250 billion spending plan, up from $200 billion through 2035. There's just so much demand, and BofA likes it. They think there's a buying opportunity here. Tech companies are going to spend $1.5 trillion on global cloud and AI infrastructure in 2027, up 40 to 50% from this. Excuse me. From this year, and they like the fact that the market is underestimating the transition towards longer term agreements and more predictable pricing. BofA has a target of 1550 on Micron, and that puts them at 31 times earnings. And if they're going to be 31 times earnings, it's not where they are now, but that's why SK looks so good at 6. Here's Micron up 8% on the day, gapped higher. Gapped higher isn't really extending. Let's see how we go in the coming days if we can hold this strength. So Axios had a really good article on the 3 big AI trends collide. And this is not really immediately market important, but I thought it gave a lot of information I thought was worthwhile. The 3 big trends are: AI is getting bigger and better both here and in China. The U.S. government is scrambling to keep pace by creating a regulatory framework, perhaps with international reach. Number 3, both America and China are considering blocking access to their best AI in recognition of the rising stakes. So, are they getting bigger and better? Well, Anthropic's Fable and Mythos models that were restricted for 3 weeks have set a new standard for the mind-boggling power of frontier AI. So Axios is saying engineers can hand these models entire multi-million line code bases and walk away for days, trusting agents to rebuild outdated systems, fix their own bugs, and test their own work with shockingly little oversight. As for OpenAI, they came back with the Soul, a model that early testers say is a quantum leap in agentic power. Developers have been left slack-jawed by its ability to summon swarms of sub-agents that collaborate and hunt for flaws and rewrite software at speeds that made previous models feel like dial-up. Finally, Space AI, which is Elon Musk's outfit after its IPO, it released Grok 4.5, a model triple the size of its predecessor. Says another model twice as big as that is coming next month, basically using brute force. So, sometimes you need a good summary of where the models lie, and I thought this was a very, very good one. Now, another trend, AI is getting bigger and better both in China. We talked about this yesterday. The Chinese startup Zifu or ZAI has GLM 5.2, free to download and performs in the same tier, though behind America's priciest models. Now, Z founder said predict China will achieve the be where Anthropic is by the first quarter of next year, where Anthropic is right now. So we're still talking about 6 to 9 months behind, which is an eternity in sort of AI land. But good to know. The U.S. is scrambling to keep pace by creating a regulatory framework, perhaps with international reach. Basically, what we saw with Anthropic when Fable 5.0 was shut down for 3 weeks was if national security becomes an issue, complying with the government becomes mandatory. So I think the Trump administration, they didn't really want to sit on AI too much, but if it's about protecting national security, they will. And then finally, the third trend is both America and China are thinking about blocking access to their best AIs. China has talked about whether or not they want to share their best externally. The U.S. is looking to restrict Chinese access to U.S. models, which could be pretty hard. And it's because AI is deeply integrated into intelligence and military for both countries. So this could change the nature of warfare, which is why it's so important to win, or at least not to lose. And in my interview with Stephen Dover, which is on the website, he said his biggest concern is the winner could be China if they can make things much cheaper than everybody else. And finally, just a quick look at the calendar. Jobless claims very steady in the middle of the range. Pepsi did report today. They just beat earnings on lower interest, on lower interest costs. The market didn't like that, and they're down 3%. Thanks for tuning in. I'll see you tomorrow.